Welcome to Talk Tickers. We're your fast track to understanding the key takeaways from the latest earnings calls.
That's right.
Today, we're jumping into the latest numbers from Atlanta Braves Holdings.
Yep, their first quarter 2025 results.
Our goal, as always, is to dig through the details and pull out what you really need to know.
Okay, so let's start with the headline numbers for Q1 2025. Total revenue landed at $47.2 million.
And how does that compare to last year?
That's a pretty solid jump, actually. It's up from $37.1 million in the same quarter last year.
Okay, nearly 10 million higher. What's driving that?
Well, it looks like growth came from both sides of the business. The baseball team itself and their big mixed-use development, the Battery Atlanta.
All right, let's break that down. First, the baseball side. What did those revenues look like?
Baseball revenue climbed up to $28.6 million.
Which was, what, last year?
$22 million in Q1 24. So a decent increase there, too.
And what specifically pushed that number up?
Primarily two things. Broadcast revenue saw a bump, about $2.2 million. That's partly because they had two more games this quarter compared to last year's Q1.
Okay.
And also, just the regular contractual rate increases kicking in.
Makes sense. What was the other factor?
The other big piece was other baseball revenue. That rose by $4.3 million. And a lot of that seems to be down to special events at Truist Park.
Like what kind of events?
Well, they specifically called out the Savannah Bananas games they hosted. Apparently, those were a huge hit.
Right. I heard about that. So using the ballpark for more than just Braves games is paying off.
Exactly. It shows that venue diversification is working.
Okay, interesting. Now, what about the other side, a mixed-use development? How did that perform?
Also strong growth there. Revenue hit $18.6 million.
Up from
$15.1 million year over year.
And the drivers there, more tenants?
Yeah, it reflects new leases starting up, plus better performance from sponsorships and parking revenue over at the Battery Atlanta.
So it really underlines the benefit of having those sort of parallel income streams, doesn't it?
Absolutely. It helps smooth things out.
So with both main segments growing revenue nicely, how did that flow through to the bottom line? Still showing a loss for the quarter, I assume? Q1 is usually lighter?
That's right, yeah. Q1 doesn't typically have home games, so revenue's naturally lower.
Yeah.
But they did improve things year over year.
Okay.
The adjusted EBITDA loss narrowed to $28.5 million. Compared to a loss of $33.8 million in Q1 last year.
And the operating loss?
Similar story there. It improved to $44.5 million, down from $52.4 million.
So losses are shrinking. That's definitely movement in the right direction.
It is. The higher revenues helped offset some of the rising costs on the baseball side.
Mm-hmm.
Things like player salaries, revenue sharing, event costs. Those were up too.
Did management give any outlook on getting to profitability overall? Is that trend expected to continue?
They expressed confidence, yeah. They believe that on an annual basis, revenue growth will keep outpacing expense growth. And they really highlighted the mixed-use development as a key driver for that, especially with their real estate footprint expanding.
Ah, right. That brings us to the Pennant Park deal. That seemed like a pretty significant move. Tell us about that.
It really does seem strategic. Pennant Park is a 6-building office complex right next door to the Battery Atlanta.
Okay. Office space.
Office space, yeah.
Oh.
But maybe more importantly, it adds over 2,700 parking spaces.
Parking. Always crucial for venues like that.
Definitely enhances the guest experience for the, 9 million people visiting the Battery each year. But the bigger picture, strategically, management sees it as a way to diversify, to get more consistent, non-seasonal revenue streams flowing in, something to balance out the ups and downs of the baseball season.
And the existing office space at the Battery is doing well.
Extremely well. They said it's at 99% occupancy, so it's clearly demand. You even have big names like Shake Shack putting their second U.S. support center there, plus a new flagship restaurant.
So Pennant Park builds on that success. What's the immediate financial expectation? Did they give guidance?
No specific P&L guidance, but they did say they expect it to be accretive immediately.
Meaning it should boost earnings per share right away?
That's the implication, yes.
Yeah.
They said the purchase price details are in the filings if you want to dig deeper.
Okay. Let's switch back to the field for a moment. The team itself, bit of a rough start to the 2025 season, wasn't it?
It was. Management acknowledged that. A tough road schedule early on.
But they're bouncing back.
Yeah, they highlighted the team's resilience, pointed to a recent winning streak that's put them right back in the hunt in the NL East.
Any mention of injuries? Always a factor?
Absolutely. They mentioned looking forward to getting key guys like Spencer Strider and Ronald Acuna Jr. back eventually. There's still optimism about making a playoff run this year.
And how are the fans responding? Attendance holding up?
Seems like it. Early signs for attendance and ticket sales are strong. They mentioned 7 sellouts already.
That's impressive.
And like we said, that Savannah Bananas event brought in huge crowds, over 140,000 people. Plus, they're gearing up to host the MLB All-Star Game this summer.
Right, the All-Star Game. Big spotlight.
Huge. And they're also doing that MLB Speedway Classic thing at Bristol Motor Speedway. So lots of visibility efforts.
Okay. Now, media rights often come up on these calls. Anything new there?
Yeah, some interesting developments. It sounds like things are stabilizing a bit with the regional sports networks.
Yeah.
Diamond Sports Group reemerging as Main Street Sports provides some clarity.
And the Braves deal specifically?
Well, the big news is that their reformulated agreement actually unlocked direct-to-consumer streaming rights for Braves games, like for the first time ever.
Ah, so fans can subscribe directly.
Seems so. And Main Street Sports apparently reported good initial uptake on their streaming service, with Braves fans being a significant chunk of the subscribers.
Interesting. So that direct-to-consumer model is gaining traction.
Management seems to think so. They believe it'll keep evolving and growing, giving fans more ways to watch. They sounded pretty positive about their local rights overall, seeing good growth potential there.
Any connection to the national MLB rights?
Well, they noted that their local deal with FanDuel is set to expire around the same time as the big MLB national rights deals.
Ah, so potential leverage or new opportunities down the road?
Could be. It gives them some optionality, potentially more growth avenues in the future.
Okay, so pulling all this together, revenue growth, improving losses, strategic real estate moves, new streaming rights. Let's move to our This Is Not Financial Advices segment. Any outrageous but plausible trade ideas jump out at you from this call? And again, folks, just ideas, not recommendations.
Understood, loud and clear. Okay, here's one thought. Given the positive noise around the direct-to-consumer streaming launch and the potential for that whole area to grow, you could consider looking at companies that actually build the tech behind sports streaming.
Yeah.
Or maybe the content delivery networks, the CDNs that handle all that data.
The picks and shovels of the streaming gold rush.
Sort of, yeah. As more teams and leagues go direct, these tech players could become essential partners. If that whole market fragments more, they might be right in the middle of it. So maybe a long position there.
Okay, that's one angle. Got another outrageous idea for us.
How about this? Focus on the real estate side. That Pennant Park acquisition, the success of the Battery, it's all about building this mixed-use environment around the ballpark to smooth out revenue.
Right. Reducing that baseball seasonality.
Exactly. So the trade idea could be to look at real estate investment trusts, REITs, that specifically focus on these kinds of mixed-use developments next to big sports or entertainment venues.
Like betting on the Battery model becoming a trend elsewhere?
Pretty much.
Yeah.
If the Battery land is a blueprint others follow, REITs specializing in that niche could potentially see significant value creation. Again, outrageous but plausible.
Definitely food for thought on both fronts. Okay, that wraps up our dig dive into the Atlanta Braves Holdings Q1 earnings call.
We've tried to pull out the highlights and connect the dots for you.
But as always, this is just a starting point. Do your own homework before making any investment decisions.
Absolutely.
What stood out most to you listening in? We'd love to hear your perspective. Thanks for tuning in to Talk Tickers.